Hi there, Serial Trader here. Let's have a look at the major US indices. And starting off with the wave chart here on SPX. So at this point, it looks fairly promising that we're coming down in either wave C, or judging by the speed at which we've been coming down so far, I would be more inclined to favor that actually we're going to have a 1-2 and be coming down in a 3 and put some pressure on these much lower levels. But not to get too far ahead of ourselves here, currently we need to at least break the October lows, and at one point today it looked almost certain that was going to happen. In fact, we took out the November lows here, okay, and we got as low as 26.21.53, and the October lows come in at 26.03.54. So yeah, we got within roughly 20 points of doing that, and then reversed sharply intraday and closed up near the highs of the day actually. But that being said, we're well below the T line still. The momentum still seems to be in favor of further downside, despite having a strong intraday recovery. But we'll have to see. So if this is the case, then we have our WXY in place, where Y failed to make a new extreme beyond W, and we're just going to fall down in this third wave, all bounces aside. That's definitely currently my primary count, but I still have to entertain. At one point today I didn't think I'd have to, but yes, I still have to entertain that the triangle count may be in play. And you might say, well, how is that? We took out the B wave low. Well, because we didn't take out the actual low here, and let me just get rid of the waves here, just so it's easier to see. So it's possible that, yes, we have our A wave up, that this overall move is the B wave, okay? And then we'll have to come up in a C, go down in E, or sorry, go down in D, come up in E, and then finish the B wave, and then go down in a C wave, right? So this overall move from up here at 28.15.15 in itself could, at this point, be an A, B, C, and that would be for triangle wave B, right? So that's possible that the B wave is developing more complexly. It is a three-wave move to the downside so far from this pivot. The only thing that can truly cancel that the triangle is still in progress would be taking out the October lows. And I suppose if you want to be very difficult, you could say, oh, well, you could still come down and take out the October lows, but not by a whole lot. And this could still be A, B, C for B, and you'd be doing a running triangle where the B wave makes a new extreme beyond A, and you can still come up and finish your triangle off in C, D, E. Now, I highly doubt it. I think that there's a ton of traders and investors that are bullish against the October lows, and I think that a trap door is just going to open to the downside should we take out those lows. But you can never be too certain of anything. So at this point, the triangle is on its last legs as far as being viable, but it is still possible. To me, we have to take out the October lows to really throw this away completely. So this is still in play, and I mean, the fact that we had such a strong reaction here without taking out the October lows, maybe this thing just isn't done being stuck in this range just yet. We gotta go sideways a little longer before we truly break. That's certainly possible. So I just thought I'd throw that out there. But also, B waves can be tricky as kind of a guideline. B waves can be more complex or longer lasting than other waves within a sequence. So that would fit well with this, the trickery that involves. But I'm still more heavily favoring this one, where we're just coming down in a more straightforward fashion. And if we just go on to maybe the hourly chart here. So from our pivot up here, which was from Monday, it looks like we have a pretty impulsive looking wave developing to the downside. Maybe if I go to a 30-minute chart, this could provide a little more detail. So maybe we just have an initial impulse wave developing for maybe wave 1 of wave 3. So maybe we got 1 down, 2 up. Maybe that was a 3, 4 there. Did our 5th today. Let's see which degree. That's probably, yeah, that's a good degree there. And now perhaps we're coming up in some sort of ABC up here. And let me just throw some fib retracements. So from the peak to today's low. And let's see here, 382. So we've already gotten past the 382 retracement of the overall move. The 50% retracement comes in at 2710. And then the 618 retracement, which also happens to be this little previous 4th wave of 1 smaller degree, comes in at 2731. So very possible. And then let me just throw some other labels on here. So perhaps that's overall wave 1 down. We're doing a 2 up. Going to go down to 3. Hang on there. I think I lost that sequence I was putting up there. Let me just throw it all down here and then adjust after. Okay, minor. So, okay, it's possible. This is overall 5 down for 1. We're going to work minor wave 2 up. And then at that point, finally get going to breaking down in wave 3. Let me just drag this down here. And then do a larger sequence here in either our C wave or our 3rd wave. So yeah, looking at this smaller time frame, it definitely looks like you know, an impulsive decline in progress. Possibly we have a little 5 down complete, and now we need a more significant corrective wave up, and that looks like it's already in play here, to at least to some degree. Although it wouldn't surprise me if we stop anywhere near around here. But there's some other levels to be looking at, like I said, 2710, 2730, especially that this is a significant previous resistance level and the previous 4th wave of this little sequence, the way it's labeled. So that's an area of interest if we get up there to reload or add to some shorts. And then, of course, at this point, must hold level. It would negate the immediately bearish scenario and put a lot of things into question as far as the wave count if we got above 2818 at this point, which I don't anticipate will happen. Okay, so just back to the daily chart there. Yeah, okay. That's a little cluttered, but that's fine. We'll go back to the Thinkorswim candlestick chart now. So from a candlestick perspective, well, we're well below the T line. The 3T line is crossing below the T line despite having this big intraday recovery. Long lower shadow rejecting those lower prices. Looks like did we not quite fill the gap? Let's see here. So the bottom of this candle is at 26.97.18. We went as high as 26.96.15. So didn't quite fill the gap. So it's not so unusual to come up and fill the gap and then continue lower. Just like in an uptrend, it's not unusual to come down, fill the gap, and continue higher. I like that we're nowhere near oversold here on this oscillator. In fact, just coming off the overbought condition. So that's certainly green lights further downside as far as this tool goes. And, you know, at one point, it looked almost certain that, oh, finally we're going to get our nice 3rd wave down and, you know, resolve this kind of sideways pattern we've been in. But then sure enough, right when we were within 20 points, we had to bounce off of that. So a little frustration from a trading perspective, but got to keep things in context. Looks like the overall pressure is still to the downside. And at this point, I'm not really going to change my mind unless we take out Monday's high there. Again, at 2800 and 18. Let's just call it 2800 because it basically is. And we're about to get the death cross. The 50 days just right there, ready to cross below the 200 day. So technically, it still looks poised for downside continuation. And if I just go the intraday chart here, 10-minute chart, you can see so far, you know, we got our little 1, 2, 3, 4, 5 down, just like I showed on the other chart there. And this looks like it's some sort of zigzag or three-wave correction to the upside. And starting to get overbought, you know, on the 10-minute oscillator here. So I would expect, I don't know, ideally tomorrow, but certainly into next week, I would expect a resumption of the downtrend, but we'll have to see. Okay, and I haven't made any changes yet. I'm still holding the SPY puts. I don't want to get shaken out of them just for a one-day bounce there. If we got back above the T line, that would certainly make me question holding that position, at least for now. And then obviously, I would have to, you know, rethink the bearish scenario once again. At least the immediate one if we got above Monday's high. Okay, now we'll move on to the Dow Jones Industrial Average. Let's have a look. So the Dow came down, took out its November lows, got pretty close to the October lows, but was unable to take them out. The Dow's gap has gone unclosed still. The Dow is still well below the T-line. 3 T-line crossing below the T-line. And it's below its 200-day moving average as well. The oscillator just coming off the overbought condition, nowhere near oversold. So the Dow still looks poised for more downside, despite this strong intraday reversal candlestick. Although this certainly gives warning if there's any kind of continuation of the upside that, okay, maybe that more complex triangle scenario is still in play that I mentioned there on the SPX wave chart. Okay, so that's the Dow. Now the NASDAQ composite. And the NASDAQ composite, I believe, was one of the stronger ones today. It more than closed its gap. It actually closed higher for the day by 29 points, 0.42%. But that being said, it's still below the T-line. 3 T-line is just getting ready to cross below the T-line. The oscillator just coming off the overbought condition, nowhere near oversold. And this isn't enough of a candle to the upside to be, say, a piercing candle. That would have to, you know, close, you know, at the 50% level of the previous candle's real body. We're nowhere near doing that. So not a particular candlestick buy signal, just an up day in what's likely still a down market. But if we do pivot here and go higher, again, the NASDAQ's wave count, and I'll point out here momentarily, NASDAQ's wave count, you could still easily make the case, as long as we don't take out the lows down here, that we have an A, a B, a C, a D, and we'd have to come up an E for the NASDAQ. So triangle is still a possibility until we take out the significant support levels there. All right, so I just thought I'd point that on the NASDAQ. Heading back to the Thinkorswim chart. Okay, I think we're done with this. We'll go with the VIX. And on the VIX, VIX really started looking like it was making some progress today. And it broke some previous resistance levels. We had kind of an area of resistance between, we'll say, 22 and almost 24. Got well past there. Went as high as 25.94. Didn't get back above these previous resistance levels, but certainly made some upward progress. Obviously rejected quite a bit intraday. VIX still closed higher for the day, though. And I'd say the VIX was just starting to wake up. Looks like it's breaking out of its range here. So it looks fairly bearish for equities if VIX continues to gain traction, and certainly if we get above that 2884 level. That should be good confirmation from the VIX that we're going down in a more significant wave down on the equity market. Okay, so that's VIX. And yeah, that's probably good for now. Certainly check in after tomorrow's session. Maybe not tomorrow, but on the weekend sometime. All right, that should be good for now. Serial Trader signing off.